Hi, welcome to this video today. I want to discuss in this video one of the most famous traders or speculators of all time. He's often referred to as the greatest trader or one of the greatest, Jessie Livermore. Now, much of what is written about Livermore is total myth. It's not based in fact at all, which I'll go through in a moment. Now, in terms of Livermore, I do feel that the book that was written about his life, Reminiscences of a Stock Operator, written by Edwin Lefebvre, is a classic trading book because it really does reveal the emotions that we all feel when we're trading and gives an insight into the psychology needed to be a successful trader. And much of the advice in the book, or most of it, Livermore never adhered to. Now, there is that big sort of myth around Livermore, which I find kind of surprising if you go and look at the facts. And there were traders around, even in his day, who were far better than he was. I want to discuss three of them today and compare them to Livermore. Now, in terms of these three traders, I would bet that anyone watching this video will not have heard of any of them. Okay, if you've heard of one of them, then I'd be surprised. They're just long forgotten to history, yet the facts prove they were far better than Jessie Livermore. I'm just going to put them up on a storyboard, the three guys we're going to discuss with the boy plunger, as Livermore was known. And then just want to go through, after I've discussed these traders, your attitude to money and how you manage your account equity. Now, that isn't that much discussed in terms of achieving Forex trading success, but it's vital you have the right attitude and you manage account equity, not trade equity, in the right way. Right, here are the three traders. See if you know any of them, then we'll be back to discuss. Right, welcome back. Obviously, we'll chat a little bit about Livermore. I personally think he's a great example of everything not to do in trading, how not to view money and how not to live your life. Now, in terms of the other three guys, obviously, I've said they were far more successful than Livermore. They were great traders. And there's something you can learn from all three of them, in my view, okay? And in that era, there was a lot of great traders around. I just picked out those three as my personal favourites. I'll come to what you can learn from them in a moment. But in terms of Livermore, greatest speculator of all time, someone we should look at as traders. Yes, we should. How not to trade. Now, in terms of Livermore, I just find him kind of a rather sad figure. At the end of the day, you cannot be considered a great trader or speculator if you end up broke, which is exactly what Livermore did. He was a hopeless alcoholic at the end, and eventually, obviously, he shot himself in the head. But if you look how he behaved in his life, to his wives and people around him, he wasn't a particularly likeable character. The family, actually, the story is pretty sad, actually. The wife, hopeless alcoholic, she shot Jessie Livermore Jr., although he did survive and she wasn't charged. But eventually, in 1971, Jessie Livermore Jr. shot his pet dog. Then he tried to shoot the police, and then he kind of did exactly what his father did and shot himself in the head. I just find it a bit of a sad story on a personal level. Livermore, deeply unhappy man. But you obviously read about, he was a great speculator. He lost fortunes 3 times. That would be my argument. That's why he's not a great speculator. But people will say, well, he made fortunes 3 times from nothing. So he must have done something right. Often you read about his uncanny ability to read the tape, okay? How much of his success was down to that? How much was down to luck? Or basically, for want of a better word, dodgy dealing, or basically doing underhand tactics? Well, I think luck and underhand tactics come into play from most of the money that he made. Let's take an example. I was reading on the net today about one of his big wins was on the Pacific Railroad stock, which he'd shorted. The author of the article was saying, again, his uncanny ability to read the tape made him, several million. I think he made about 10 million, something like that, from that stock. What the article doesn't say was that Livermore was hopelessly over-leveraged in the position. He was just about to get wiped out, and the San Francisco earthquake saved him and collapsed the stock. Now, one of Livermore's methods of making money, which was very effective for him, was he had a very larger-than-life personality. Okay, he was all over the media, and he would use that to his advantage by saying he was going to go and buy a stock. When the public came in and bought it, he would launch a bear raid on it, smash the stock. That was just one of the tactics he used. In those days, of course, they were all up to it. There was no regulation. What Livermore did in those days, he'd be in jail today. And of course, when regulation started to come around, the days that you could do all these underhand tactics had gone. Livermore couldn't make any money anymore. So for me, Livermore, no, he cannot be considered a great speculator. Although, like I've said, Reminiscences of a Stock Operator is a fantastic book in terms of its insight into the psychology of trading. Now let's look at the other guys and just the important tips that you can learn from them. And Livermore could have learnt the tips as well. Might have saved him. I'm just going to do it on a quick storyboard. Right, let's look at the three traders. First one will be big Arthur Cutten. What can we learn from him? Well, I've actually put leverage and staying power, and I'm sure that most traders watching this video will know of the dangers of leverage. Arthur Cutten didn't use much leverage at all. Okay, Livermore would use huge amounts of leverage, and in those days it was traditional. You borrowed heavily against your paper profits. Okay, well, Cutten did this occasionally. He would always, after he'd liquidated an investment, pay back his borrowings. He wouldn't keep them. Okay, whereas someone like Livermore would. He didn't use much leverage, and he always made sure he had plenty of money in reserve. But I think the real lesson you can learn from him is learn the art of getting rich slowly, or making money slowly. In terms of his investment method, it was outlined in Story of a Speculator. It sounds incredibly simple what he did. It is, but it made him a lot of money. And I think it's a great way to make money for busy traders is this, okay? He would basically look for stocks that no one wanted, that were at bearish extremes. He would look at the fundamentals and decide if they could get any worse, and if they couldn't, and but you'd also look to see if they might turn bullish as well. He'd come in and buy, but he'd only buy small. Okay, if it went a little bit against him, he would still buy. Okay, and so long as he actually thought it was going to turn, he would have a very small positions in, and then when it started to turn in his favour, he'd start to basically scale in. But these positions weren't big. Okay, they're relatively small. What he wanted to do was be in at the turn and then hold for a long time. Years if he could. Now that sounds incredibly simple, doesn't it? Is it a good way to make money? Well, I'm trying a little bit of the Arthur Cutten technique myself this year, and it's actually going quite well. It's not a big position. Looked at the yen, I'm sure regular viewers will know, extremely enthusiastic about the yen going up this year. I was in January, so I started buying in small. Didn't really work for me in January. Be able to build up a little bit in February. It's going really, really well. It's only a small position though, and despite the fact that the yen has moved really nicely in my favour, I am taking the Cutten view. If the fundamentals haven't changed, stay with it. I think the yen this year is going to have a huge move. It's only just started. Now, we'll do what Cutton does. Yeah, if it does get too overbought in the short term, I might take some money off the table, but I want to stick with it. And what makes sticking with this trade easier is you've got the turn and you've got the cushion. And I think, it's a great way for busy traders or busy people to make money. It's a long-term buy and hold. And, if the yen, and I don't want to tempt fate, if it runs the way I think all year, my, very low leverage trade could actually be a really big winner. We shall see. In terms of Cutton, I put trading against the Livermore bear raid. And like I said earlier on, a lot of money in those days was made by traders, not down to skill. It's just have you got enough money to basically force the price. So, Livermore would do it. He was a person who might bring in other people with him to do it. They all did it, really, or most of them. And he launched a bear raid against Cutton. Now, in terms of this bear raid, I think it was in wheat. Unfortunately, I didn't realise, or Livermore didn't realise, that Cutton was on the other side with huge financial resources. So he's managed to basically come in, force the price up. He took about, I think it's an 18 million profit, left Livermore and the guys on the other side with a big loss. He was not a guy who was egoistical at all. Livermore courted the media, revelled in the attention. Cutton worked from an office without even his name on the door. He was there to make money. That was it. It was business to him. And he was a very determined man. He could trade short term. He could trade long term. He had incredible persistence, incredible work rate and dedication. An interesting story about him is that he got burgled, him and his wife. The burglars took cash, jewellery, and 25 cases of whiskey. Cutton was so incensed that he decided he'd hunt them down. It took him, I think, 8 years, but he put all of the burglars in jail. So not a man to mess with. But I do like that sort of just art of getting rich slowly, for want of a better word. And it's one of those things, I'll just stress it one more time for beginners. You do not need much leverage. If you are able to get into big trends and hold them, and psychologically, if you get the turn, it's a lot easier to hold the move, in my view. So let's move on to our next trader, which is Bernard Selim Ben Smith. He's one of the real characters of the era. And he was incredibly courageous trader, had great courage, he had great conviction, he had a great eye for the markets. But what really I think you can learn from him was his ability to switch his opinion quickly. Not just in terms of my opinion's wrong, I'll come out the investment. He would very often just switch from bullish to bearish, bearish to bullish, and reverse his position. And I think most traders have a problem giving up their opinion about a trade, and very few traders will actually switch the trade to the opposite side, okay, and go the other way. It's something that most traders cannot do. I can't remember who said it, but someone said it. All the great traders can do this, and Smith was the master at it. Now, the reason he got his nickname was he was flying back to Canada, and he heard about the Wall Street crash. So turned the plane round, went back to his office, went in and said, "Sell them all, they're worthless." He was bullish, he switched immediately to bearish, that's where his nickname comes from. And, excuse me, I'm losing my voice. A really fantastic trader. That switching of the view, though, I think all traders should keep in mind. It's hard to drop an opinion. For most traders, it's very hard to not just drop the opinion, but go the other way. But very often, if you think about it, it is the right thing to do. Also, what I think we can learn from him is flexibility. He basically changed with the markets, and he changed with the times. Now, he was one of the most notorious bear raiders around. He was ruthless, so ruthless, in fact, he collapsed a stock once. The only problem was the company that he just collapsed belonged to his father-in-law, and he had to pay out several million to the father-in-law just to keep the family peace. I don't know if he knew it was his father-in-law's company or not, but he's very flexible. When the bear raiding, people frowned upon it, and he knew regulation was coming, gave it up. He just started trading a different way. He started to become a buyer. He made a fortune in gold. He then decided to become a kind of respectable, say, joined Thomas McKinnon. He still invested very successfully. He also underwrit the share launch, I think it was Grumman Aircraft Corporation. Now, in terms of that flexibility, we need it as traders. Now, we don't have to change with the times because regulators might be after us, but we certainly have to change with the way the markets are. And people say markets stay the same. They do to a degree, but they're always changing. And Paul Tudor Jones actually said, you either evolve or you die. And I think a lot of traders try and trade in the same way, where you've got to change your strategy. And I think, if you look at the markets in recent years, we've had low volatility. Okay, it's picked up a little bit recently. Low volatility, a lot of spiky price action. Doesn't suit certain types of trading. Okay, for example, when I first started trading, you had huge volatility, nice big long trends that continued, not so much spiky action. It was easier to make money. You've got to adjust. In terms of long-term trading now, I like the Cutton method, or using the COT, which everyone knows. So if I'm swing trading, I'm very careful in terms of only really big volatile price spikes. I'm more careful about buying or selling out of tight ranges. I think we have to change. And a lot of people just want to stay with the same strategy and not tweak it. I mean, Livermore basically wouldn't change his strategy, and he just couldn't cope with the new regulation. He had tunnel vision. You can't have tunnel vision as a trader, okay? I've always got to be evolving and changing. Now, my final trader or traders are the three Fisher brothers, okay? Now, the Fishers were probably in the 20s the most successful speculators on the street. But, if you look them up on the net, what you're going to get is the Fisher Body Parts Museum renovation. Nothing about them as traders. Now, they were obviously famous for Fisher body parts, okay? They supplied them to GM. They were successful on Main Street, hugely successful. They supplied body parts to GM. They also owned a lot of the subsidiaries of GM. Their fortune before they came to Wall Street was 500 million, okay? Now, what I like about the Fishers is they came to Wall Street with the same attitude that they ran their normal business. They viewed it as a business. And when they came, they did get a lesson. The first time they traded, they got hit by a bear raid. That never happened to them again. They got their education, so to speak. They did have such a weight of money that not many people wanted to take them on at all. When they came in to New York, it caused a real buzz on Wall Street. Why are the Fishers in town? Something big's going to go off. Many people wanted to work out where they might be going with their trading or what they were doing. They did trade after trade after trade. They won almost all of them. What they did was they didn't just make money for the sake of money and pursue even more and more. They drew it out. So, like in their business, the body parts business, they paid themselves money. When they made a lot, good profits, they would withdraw them. They kept doing that. They treated it as a business. They weren't there for the thrill and excitement at all. Now, one thing I quite like about the Fishers is the 1929 crash came and they lost a bit of money, okay? But they had the good sense to just basically think, you know what? Yeah, we have got enough money. We've made enough. We don't need any more. We're going back to Detroit. And they just packed up, left. They were never seen again. And they worked to make money. But it wasn't an obsession. Money for them was to be spent. They lived fairly comfortable lives. They were very generous to charities and so forth. Real pros, in my view. And yet, if you look at the financial media, did you ever see the Fishers discussed as great traders? No, of course not. Because they're a little bit boring, aren't they, compared to Jessie Livermore? They don't have that sort of bravado behind them. But you don't need bravado if you want to make money. That works against you. So really, like all these traders, I really love the Fisher brothers and their attitude. Back off that short summary there of some traders I really admire. When I was doing that storyboard, I actually forgot to mention one of the points that I wrote down, which is I put down the name of William Crapo Durant. Very similar to Livermore in many respects, a larger-than-life character, very flamboyant lifestyle, big ego. He was responsible, though, for forming General Motors, or GM, where obviously the Fishers were involved, which was quite an achievement. He also had a big hand in Buick and Cadillac as well, getting their companies off the ground. He speculated in numerous areas, but his track record was just like Livermore's. He made a fortune, lost it, made a fortune, lost it, and then eventually just died in poverty. Now, when you look at Livermore and Crapo, it's the same sort of profile, really. They were thrill seekers, they were risk takers, they were addicted to trading. They were both gamblers, really. And if you over leverage or get overexposed, it's eventually going to catch up with you. If you're lucky, your luck's eventually going to run out. It happened to both of them. But if you think of how much money they made, they could have lived very comfortable lives, couldn't they? Livermore had, I think, 100 million that he could have spent and been happy with. And Crapo wasn't that far behind. For me, if you're coming in to trading, obviously it's not, if you're looking for thrills, excitement, don't waste your time. You won't make any money. And it's surprising how many people come into trading and you ask them what they want to do it for. And they just say to make as much money as possible. It's a great attitude to come in with if you want to lose your money. You've got to treat it as a business. And if you look at the guys we just looked at, they all did. Okay? Leverage, low. Clutton proved you could make a ton of money doing that. Also, in terms of loss taking, keep your losses small, keep a lot of liquidity. And the Fishers are probably the perfect example of, running, trading as a business. What they did when they came into trading, once they got enough out of an investment, that was it, they were gone. They didn't hang around to wait for more. You've got to call an end to the game, okay? I've often said this, if I get up over 10% on my account, very often just shut it down and start again. Don't just pursue more money. If I'm in a good run, I could come into a bad run. Or if you suddenly just get a big windfall profit, you didn't expect it, just take it. Mark Douglas said this. One of the big problems that most traders have is they can't call an end to the game. You've got to call an end to it. It's not like a running race where there's an end post or football game when 90 minutes is up, okay? Forex trading isn't like that. you have got to end it. Now, in terms of a great way of trading and having the right attitude to money, in my view, is you run it as a business, okay? And you reward yourself accordingly. And you take money out of your trading account. Someone was saying this in our Facebook group, Chris. It's a great way to keep you focused on the money is money. It's cold, hard notes. Yeah, what can you do with that money? And I always think that, let's say I'm trading, I'm having a good time. I will very often just take money out of the account for something specific. And I might, sort of think 1 month, well, I want this. When I've got the money, I'll take it out and buy it. Doesn't matter what it is. I mean, everyone's account is different, okay? But reward yourself. When you got a big profit, think actually, if I had that profit now, what actually could I buy with it? Or if you're losing a lot of money, think in the same way. Think of it in cold, hard notes and what you could do with it, if you were to spend it, okay? And I think, it might sound a fairly obvious point, but I think most traders, when they look at their equity, they just see it as numbers on a screen. They don't see it as cold, hard cash, which I think you should. It's a bit like casinos that give you chips. So it's not like real notes, which means you're going to be a little bit more reckless with your money, or that is the way for most people. So I think rewarding yourself regularly is a good idea. And also just keeping in mind what you could do with the money when you're making it. I mean, this might sound a point that many people might not agree with, but I think it is a great way of seeing your account equity. It keeps you focused on its real money, so you don't get, let's say, out of control. For me, Forex trading, you don't need to be flamboyant to be a Forex trader. It is fairly boring in terms of process. You need to look long term, but the rewards can be excellent. And I think just one final point. It was Ed Thorpe who once said, in trading, you've just got to decide when enough is enough. And he goes, for many people, enough is never enough. And I think that's certainly applied to Jessie Livermore. Right, that is the video for today. I hope you enjoyed it. Thanks for watching as usual. Take care. Have a good day.